A good day and welcome to the market structure tutorial. So basically, market structure is just how the candlestick moves. As you can see, these are candlesticks. I shrinked it so that I'll be able to use this space to explain. I hope you're understanding. So market structure is just how the candlestick moves. So if you can understand market structure even at the very beginning, you have understood a lot. I hope you're understanding. So let's just jump straight into the video, and I'll try as much as possible to simplify it, because market structure is made up of things. So what now makes up market structure? Let me type over here market structure. So what makes up market structure? We have the BOS and we have the chalk. So that is boss and chalk. So I would explain what boss and chalk is as we move along. So this is what makes up what market structure. So as you can see all these candles moving, there is a particular way candles move. In an uptrend, just give me a while, I'm trying to get, okay, this is it. So in an uptrend, the candle don't just go straight up, and in a downtrend it doesn't just go straight down. I hope you're understanding. There is a particular way this candlestick moves. I hope you're understanding. So in an uptrend, candles create what they call higher highs and what higher lows. So what I'm talking about is the candle goes up, creates a high, then creates what we call what higher low, then creates what we call what higher high, higher low, higher high, higher low, and so on and so forth. So let me just write some things. Let me reduce the font so that you see what I'm talking about. So as you can see, from this very beginning to this point is what we call an I. So let's say this is the first I. Let's write H as I, as the first I. Then as you can see, it now went down and it created what we call an higher low. It is an higher low because the low is not lower than the beginning. I hope you're understanding. So it means that even though it went down as a low, it's still higher than this place. So that is why we call it what higher low. So let's put it here, higher low. So write HL as higher low. So as you can see, after the higher low, it's now created another high, and we'll call this higher high because it is higher than what the previous high. I hope you're understanding. So as you can see, this is high, higher low, then higher high. That means this will be what higher low, because it is, even though it is a low, it is still higher than the previous low. So this is how price moves in an uptrend. So this is higher high, we'll name it HH, higher high, and this also will be higher low. So let me duplicate this one. Let me see if I can duplicate it. Okay, clone. So this is what higher low, and then the next one is what higher high, and then this is another what higher low, and then this is what an higher high. So this is how price moves in an upward trend. So you can see it's created high, higher low. It is called an higher low because it is higher than the previous low, higher than the previous low, higher than the previous low. Then higher high, it is higher than the previous high, higher than the previous high, higher than the previous what high. So this is how price moves in an uptrend. Then in a downtrend, price creates what we call lower highs and lower lows. So it creates what a low, a lower high, a lower low, a lower high, and what a lower low. As you can see, as you can see. So this is what the low. We'll label it as L. This is the low. Then price will now create what we call what a lower low. It is called a lower low because it is lower than the previous low. Then it now creates a what lower high. It is called a lower high because even though it went up as high, it is not equal to the previous low and it is not higher than what the previous low, so it is what a lower high. So we label it as what LL, LH, sorry, LH. So as you can see, this is another lower high because it is lower than the previous high, and this is what a lower low because it is lower than the previous low. So this is how price moves in an uptrend. This is how price moves in a downtrend. So how do we now identify BOS? BOS simply stands for breakout structure. Breakout structure. Breakout structure. Structure. This is what BOS simply means. Breakout structure. So a breakout structure occurs when in an uptrend, because we call it a bullish breakout structure. That is BBOS. So in an uptrend, you will get a bullish breakout structure when you can identify that price has broken past the what. Let me change the color of this line so that you would see it much better. I'm coming. Let me change the color. Let's use red. Let's use red. So in an uptrend, once you can identify that, you know, price has broken past the previous high, it is what a BOS. So this over here is a BOS, a bullish breakout structure. So this is a breakout structure over here. So let me write it, breakout structure. Let me change the color to green so that you see it. Oh, I don't like this green. Let's use another green. Or let's use, I don't know, let's use black. Yeah. So this is what a breakout structure. So this is another breakout structure over here. This is another what breakout structure over here. So once you can identify what breakout structures, it is like the very beginning of, you know, identifying how the market moves. I hope you're understanding. So this is another breakout structure over here. So as you can see, once you can identify that price has broken past the previous high, it's a breakout structure. Broke past the previous high, breakout structure. Broke past the previous high, breakout structure. Then for a downtrend, you'll see a bearish breakout structure when price breaks past the previous low. So previous low breakout structure over here, and then previous low breakout structure over here. So this is what a bearish breakout structure. This is a bearish breakout structure over here, and then this is another what bearish breakout structure over here. So if price wants to now change from an uptrend to a downtrend, something must occur, and we call it the what chalk. So chalk means what? Change in character, or change of character, not in character. So change of character. And this change of character happens when price that was creating an high like this, let's say created an high, and then, you know, and then started going down. So instead of price to now do what, let's say create a low and then higher high, it's now broke down. So as you can see over here, price now went down to create lower low. You know, let's say even at this point safe, it now created what? An higher high. You know, it's still an uptrend, but as you can see over here, price has now, you know, broken past the higher high and is now going down. So this will now be your what? Chalk over here. This will be your chalk over here, because price has already what? Equaled your higher low, and it has broken past your higher low. So this place will now be called what? Your chalk, because there is a change of character over here. So basically, this is how market structure works, and this is how it moves. I hope you understand it. So price in an uptrend creates higher highs and higher lows. In a downtrend, lower highs and lower lows. And then you first need to identify what your BOS, which is the breakout structure, so that you'll be able to know and identify that yes, price has created either an higher high or what, a lower low. I hope you understand. So this is how market structure works, and when there is a reversal, it's now a change of character. So basically this is how market structure works. If you have any questions, you can drop it down in the comments section and I will answer your questions. Do enjoy the rest of the day. We'll talk about the key level and the other blocks in the next video.